Based on the historical data and forecast, Bitcoin has been fluctuating within a range between $82,300 and $87,100. The RSI indicates periods of oversold and overbought conditions, with recent readings suggesting a neutral to slightly bearish momentum. The Bollinger Bands show that the price is currently approaching the upper band, indicating a potential for a short-term pullback. Combining these factors, I recommend a strategy that involves a long position when the RSI dips below $40, with an entry price of $82,300. The stop loss should be set slightly below the support level at $81,800, and the initial target price should be the resistance level at $87,100. To optimize returns, I propose a layered exit strategy. Once the price reaches $87,100, take 50% of the position and move the stop loss to the entry price of $82,300. If the price continues to rise, set a second target price at $88,000 and exit the remaining position. This strategy balances the potential for high returns with risk management, ensuring that profits are secured while minimizing potential losses. The forecast data suggests a continued upward trend, but caution is warranted given the proximity to the upper Bollinger Band. This layered approach allows for flexibility and adaptation to changing market conditions. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with recent price fluctuations. The RSI consistently stays below 60, indicating a lack of strong bullish momentum. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given the support price of $299, I recommend a contrarian strategy aiming for a rebound. We will enter a long position at $303, placing a stop loss at $299 to protect against further downside. The initial target price will be $322, aligning with the resistance level. To enhance the strategy, we will incorporate RSI signals. If the RSI drops below $37, which indicates an oversold condition, we can consider adding to our position at $303. If the RSI reaches above $48, we can consider taking partial profits at $319. The overall portfolio will be 60% long position at $303 with a stop loss at $299 and a target price of $322, and 40% waiting for RSI signals to adjust the position. This balanced approach combines trend following with contrarian and momentum strategies to maximize potential returns while managing risk. Based on the historical data and forecast, STRK has shown volatility, with support around 0.606 and resistance around 0.724. The RSI has fluctuated between 37.8 and 52.6, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened and narrowed, reflecting periods of increased and decreased volatility. The forecast for the next week suggests a potential downward trend, with prices ranging from 0.638 to 0.603. Considering these factors, I recommend a short-term contrarian strategy focused on capitalizing on short-term bounces. My proposed strategy involves entering a long position at 0.615, coinciding with the forecast price on April 5, 2025, and the lower end of the recent trading range. I will set a stop loss at 0.606, just below the established support level, to limit potential losses. The target price will be 0.659, aligning with the recent resistance level. This strategy aims to profit from a potential short-term bounce back towards the resistance, while the stop loss protects against a further decline. The RSI is currently around 40.2, suggesting the asset is approaching an oversold condition, which could trigger a short-term upward movement. This strategy has a potential return of 0.044. Based on the historical data and forecast, Ethereum is currently in a downtrend. The price has been consistently declining from March 19, 2025, to April 1, 2025, and the forecast indicates a continuation of this downward trend. The support price is consistently at $1,880, and the RSI has been fluctuating between 34.0 and 47.4, indicating oversold and overbought conditions. The Bollinger Bands show a contraction, which often precedes significant price movements. Considering these factors, I propose a short selling strategy. We will enter a short position at $1,900, placing a stop-loss order at $1,950 to limit potential losses if the price unexpectedly reverses. The initial target price will be $1,800, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI reaches an oversold level below 30, we will consider covering the short position partially or fully. Conversely, if the price touches the bottom of the Bollinger Bands, indicating a potential rebound, we will adjust the stop-loss order downwards to $1,850. If the price breaks above the upper Bollinger Band, we will exit the entire position. We will also set a second target price at $1,770, contingent on the price sustaining below $1,850 for 2 consecutive days. This combined approach leverages multiple technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, XRP shows a downtrend with fluctuating volatility. The RSI consistently dips below 50, reaching as low as 38.2, indicating oversold conditions. The forecast predicts a continuation of this downward trend, with prices hovering around $2.1 to $2.2. Combining these observations, I recommend a short position strategy. Enter a short position at $2.14, placing a stop-loss order at $2.07, just above the lower Bollinger Band. The initial target price is $2.09, aligning with the support level. If the price continues to fall, a second target price can be set at $2.05. To maximize returns and manage risk, I propose a portfolio combining RSI, Bollinger Bands, and support/resistance levels. The primary strategy is the short position described above. However, we will also utilize the Bollinger Bands to refine entry and exit points. If the price touches the upper Bollinger Band, consider closing the position early to secure profits. This dynamic approach, combining technical indicators and support/resistance, aims to capitalize on the predicted downtrend while mitigating potential losses. The final portfolio would include a 60% allocation to the short position, 30% to the Bollinger Band strategy, and 10% reserved for adjustments based on real-time market conditions. Based on the historical data and forecast, Binance Coin shows a slightly upward trend with periods of consolidation. The RSI fluctuating between 46 and 56 indicates a neutral to slightly bullish momentum. Considering the Bollinger Bands, the price has been oscillating within the bands, suggesting continued volatility. My strategy will be a combination of RSI and Bollinger Bands to maximize returns. I recommend a long position with an entry price of $610. The stop-loss will be set at $587, just below the established support level, to protect against significant downside risk. The initial target price will be $636, aligning with the resistance level. If the price reaches $636, we will move the stop-loss to the entry price of $610 to secure profits. If the price continues to rise, we will set a second target price of $669, near the upper Bollinger Band. This strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, Stellar exhibits a slightly downward trend, with recent fluctuations around the $0.27 to $0.30 range. The RSI consistently hovers between 40 and 52, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing, suggesting decreasing volatility. Given the forecast prices, which are expected to remain relatively stable around $0.27, and the support price of $0.264, a conservative strategy is warranted. I propose a long position entry at $0.273, placing a stop-loss order at $0.264 to protect against a potential breakdown of the support level. The initial target price is set at $0.294, aiming to capture a moderate upward movement if the price revisits recent highs. To refine this strategy, we can incorporate the RSI. If the RSI drops below 40, indicating an oversold condition, we can consider entering a long position at $0.271 with a stop-loss at $0.267 and a target price of $0.286. Conversely, if the RSI reaches 52, signaling a potential overbought condition, we might consider a short position at $0.272, with a stop loss at $0.277 and a target price of $0.267. Combining these signals, a blended portfolio with a 60% allocation to the long position at $0.273 and a 40% allocation to a short position at $0.272 seems optimal, balancing risk and potential reward. Based on the historical data and forecast, Doge-Coin demonstrates a clear upward trend, supported by consistently breaking through resistance levels and a positive forecast for the upcoming week. The RSI fluctuates between 54.8 and 66.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been expanding, suggesting increased volatility and potential for significant price movements. Given these observations, I recommend a long position strategy. We will enter a long position at $4.03, coinciding with the first forecast price and a recent upward trend. A stop-loss order will be placed at $3.86, just below the support level, to mitigate potential losses if the trend reverses. The target price for this trade will be $4.35, representing the highest forecast price and a reasonable profit margin considering the recent price action. To refine this strategy, we will incorporate the RSI. If the RSI drops below 20, indicating an oversold condition, we will hold the position, anticipating a bounce. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we will consider taking partial profits or tightening the stop-loss. The combination of the upward trend, positive forecast, and RSI-based adjustments offers a high probability, high-return investment opportunity. Based on the historical data and forecast, Cardano shows a downtrend with increasing volatility. The price has been fluctuating between a support level of $0.661 and a resistance level of $0.737. The RSI indicates that the asset is currently in a neutral range, but nearing oversold territory. The Bollinger Bands are widening, suggesting increased volatility and potential price swings. Considering these factors, I recommend a short selling strategy with a conservative approach. We will enter a short position at $0.686, placing a stop-loss order at $0.679 to limit potential losses if the price unexpectedly rises. Our target price will be $0.673, aiming for a modest profit given the current market conditions. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 20, oversold, we will consider covering the short position and potentially going long, anticipating a bounce. Conversely, if the price touches the lower Bollinger Band, it may signal a potential rebound, prompting us to close the short position and reassess the market. This combined approach, blending short selling with RSI and Bollinger Band confirmations, aims to maximize returns while managing risk effectively. The portfolio will allocate 60% to the short selling strategy and 40% to the RSI and Bollinger Bands confirmations. This allows for flexibility and adaptation to changing market dynamics. Based on the historical data and forecast, Litecoin exhibits a clear downtrend. The price has been consistently declining from March 19 to April 8, with the forecast predicting further drops. The support price remains steady at $83, while the resistance fluctuates. The RSI values have mostly been below 50, indicating bearish momentum, with several days falling below the oversold level of 20, suggesting potential for a short-term bounce but overall confirming the downtrend. The Bollinger Bands show the price consistently trading near the lower band, further reinforcing the bearish outlook. Therefore, I recommend a short position strategy. My proposed strategy is to initiate a short position at $84.4. Given the strong downtrend and the forecast, a conservative stop-loss should be placed at $86. The initial target price is $81, aligning with the forecast. If the price action shows further weakness, a second target can be set at $77.8. This strategy combines trend analysis, RSI signals, and Bollinger Band confirmation to maximize potential returns while managing risk. The RSI indicates an oversold condition, but the overall trend suggests a limited bounce, making this a favorable shorting opportunity. Based on the historical data and forecast, STRK shows a fluctuating trend with a recent upward bias. The RSI consistently remains below 80, indicating that the asset is not overbought. However, the price has tested the resistance level of $2.79 multiple times. Considering the forecast for the next week, the price is expected to decrease slightly, hovering around $2.25 to $2.34. Therefore, I propose a contrarian strategy that aims to capitalize on short-term dips. My recommended strategy is to enter a long position at $2.25, coinciding with the forecast price and the lower Bollinger Band. Place a stop-loss order at $2.2, slightly below the support price of $2.27, to limit potential losses. Set a target price at $2.6, aiming to capture a significant portion of the recent upward trend and approaching the resistance level. This strategy combines the RSI's indication of a potential oversold condition with the Bollinger Band signal of a possible price correction, offering a balanced approach to maximize returns while managing risk. Based on the historical data and forecast, Aptos shows a downtrend with a support price of $5.23 and a resistance price of $5.62. The RSI indicates oversold conditions on March 31, 2025, with a value of 40.0, suggesting a potential bounce. The Bollinger Bands show Aptos trading within a narrowing range, indicating decreasing volatility. Considering these factors, I recommend a contrarian strategy. We will enter a long position at $5.23, coinciding with the support level and oversold RSI. Place a stop-loss order at $5.17, just below the forecast price for April 8, 2025. Set a target price at $5.62, the resistance level, for a potential profit of $0.39. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, which is $4.93, it signals further downside momentum, and we should exit the position. Conversely, if the price touches the upper band at $6.09, it suggests a strong upward move, and we can consider taking partial profits or adjusting the target price. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on potential rebounds while mitigating downside risk. The portfolio will be 60% based on RSI and 40% based on Bollinger Bands. Based on the historical data and forecast, SE shows a downtrend. The price has been fluctuating within a range of $0.172 to $0.21, but the forecast indicates a continued decline towards $0.163. The RSI consistently remains below 80, suggesting the asset is not overbought, while the recent dip below 30 indicates a potential oversold condition. Considering the Bollinger Bands, the price is approaching the lower band, which could signal a potential bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a long position when the RSI reaches an oversold level of 20, with an entry price of $0.172. The stop-loss should be set just below the support level at $0.168 to limit potential losses. The initial target price will be the center of the Bollinger Bands, which is $0.195. If the price reaches this target, we can re-evaluate the trend and consider a second target at the resistance level of $0.182. This strategy combines RSI and Bollinger Bands to capitalize on short-term price fluctuations within the established downtrend, aiming for a quick profit while managing risk effectively. Based on the historical data and forecast, Ethereum Classic demonstrates a downtrend. The RSI consistently hovers below 50, reaching oversold levels towards the end of the observed period, indicating potential for a short-term bounce but not a trend reversal. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential breakout. The forecast data further reinforces the downtrend, with prices predicted to continue declining. Therefore, I recommend a short-selling strategy. Our strategy involves shorting Ethereum Classic at $16.8. Given the support level at $16.5, we will set a stop-loss at $17.1 to limit potential losses if the price unexpectedly rebounds. The initial target price is $16.3, aligning with the forecast and the lower Bollinger Band. If the price continues to decline, we can adjust the target price to $16.4. This strategy prioritizes capitalizing on the existing downtrend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Polygon exhibits a downward trend, especially considering the forecast prices are consistently lower than recent closing prices. The RSI consistently hovers around the mid-30s to low 40s, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show the price has been fluctuating within a narrow range, recently approaching the lower band. Given this, I propose a short-selling strategy targeting a potential downward continuation. My strategy involves entering a short position at $0.202. The stop loss will be set at $0.215, just above the center of the Bollinger Bands, to limit potential losses if the price reverses. The initial target price is $0.194, aligning with the forecast price for April 5, 2025. If the price reaches $0.19, I will adjust the target price to $0.19 to capture further potential downside. This approach combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, AEVO exhibits a declining trend, particularly evident in the recent forecast prices dropping from 0.11 to 0.0999. The RSI consistently hovers below 50, indicating a generally weak momentum, with dips below 35 suggesting oversold conditions. The Bollinger Bands show a narrowing range, which can signal increased volatility. Given these factors, I recommend a short-selling strategy. The entry price should be set at $0.108, coinciding with a recent price level and a relatively oversold RSI reading. A stop loss should be placed at $0.114, just above the recent high, to protect against a potential reversal. The target price should be $0.0999, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential shorting opportunity. Considering the forecast, a short position at $0.107 with a stop loss at $0.11 and a target of $0.0999 offers a conservative yet potentially high-return approach. This combined RSI and Bollinger Band strategy provides a layered approach to risk management and profit maximization, capitalizing on the anticipated downward trend in AEVO. The combined strategy offers a more efficient portfolio. Based on the historical data and forecast, optimism shows a downtrend with decreasing prices. The RSI consistently hovers below 50, indicating a weakening momentum. The Bollinger Bands are widening, suggesting increasing volatility and a potential for further price declines. The forecast data further confirms this downward trajectory. Given these observations, I recommend a short-selling strategy. Entry price should be $0.764, with a stop loss set at $0.788 to limit potential losses if the price unexpectedly reverses. The target price is $0.659, aiming to capitalize on the anticipated downtrend. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, oversold, it signals a potential bounce, but in this case, the RSI has been consistently low. When the price touches the lower Bollinger Band, it suggests a potential bounce. Combining these signals, if the price reaches $0.738 and the RSI is below 30, consider a short position with an entry price of $0.738, a stop loss at $0.76, and a target price of $0.671. This approach balances the overall downtrend with short-term volatility signals for more precise entry and exit points. Based on the historical data and forecast, STRK exhibits a downtrend. The price has been consistently below the Bollinger Band center, and the forecast indicates a continued decline. The RSI consistently hovers below 50, indicating a lack of strong bullish momentum. Considering the support price of $0.147 and the forecast, I recommend a short-selling strategy. We will enter a short position at $0.15. To manage risk, we will set a stop loss at $0.151, just above the upper Bollinger Band. Our target price will be $0.138, aligning with the forecast for April 8, 2025. To refine the strategy, we'll incorporate the RSI. If the RSI drops below 30, indicating an oversold condition, we will exit the short position and consider a long position. Conversely, if the RSI reaches 80 or higher, indicating an overbought condition, we will exit the short position. This dynamic adjustment allows us to capitalize on short-term reversals while maintaining the overall bearish outlook. The portfolio will prioritize the short-selling strategy with RSI adjustments for optimal returns. Based on the historical data and forecast, Solana shows a mixed trend with periods of volatility. The RSI consistently remains below the overbought level of 80, currently at 42.6, suggesting that the asset is not overvalued. The Bollinger Bands indicate that the price has been fluctuating within a range, with the recent price approaching the lower band. Considering the forecast for the next week, which predicts a slight downward trend with prices ranging from $126 to $124, I recommend a moderately conservative strategy. My investment strategy is to initiate a long position at $126, capitalizing on potential rebounds from the support level of $124. To mitigate risk, I will set a stop-loss order at $123, just below the forecasted low. The target price for this trade will be $128, aiming for a modest profit while acknowledging the current market uncertainty. This strategy combines the RSI's indication of potential undervaluation with the Bollinger Band's suggestion of a possible price correction, offering a balanced approach to the investment. Based on the historical data and forecast, Jupiter demonstrates a clear downtrend. The price has been consistently falling, and the forecast projects further decline. The RSI consistently stays below 50, indicating a bearish momentum. The Bollinger Bands also support this view, with the price frequently touching the lower band. Considering this, a short selling strategy is recommended. We will initiate a short position at $0.437. The stop loss will be set at $0.451, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly rebounds. The initial target price will be $0.354, aligning with the forecast price for April 8, 2025. To refine the strategy, we will implement a dynamic target price adjustment based on RSI. If the RSI reaches 80, overbought, we will close the position and secure profits. This will happen at a price of $0.368. If the RSI remains below 80 and the price continues to decline, we will adjust the target price to $0.354. This layered approach combines the forecast data with RSI signals for optimal risk-reward management, maximizing potential returns while minimizing downside risk. This portfolio is the most efficient as it incorporates both historical data and RSI signals. Based on the historical data and forecast, Render has been fluctuating within a range bounded by a support price of $3.4 and a resistance price of $3.92. The RSI indicates periods of both overbought and oversold conditions, though it has generally remained within a moderate range. The Bollinger Bands show that the price has recently approached the upper band, suggesting a potential for a pullback. Considering these factors, I recommend a strategy focused on capitalizing on short-term price swings. We will initiate a long position when the RSI dips below 40, indicating an oversold condition. Specifically, enter a long position at $3.57. Set a stop-loss order at $3.4, just below the support level, to limit potential losses. A target price of $3.73, aligning with a recent high and a reasonable profit margin, would be suitable. To refine this strategy, we can incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, it signals continued upward momentum, potentially revising the target price upwards. Conversely, if the price touches the lower Bollinger Band, it reinforces the oversold condition and validates the entry point. For the upcoming week's forecast, if the price reaches $3.65, consider taking partial profits and adjusting the stop loss to protect gains. This combined RSI and Bollinger Bands approach aims to balance risk and reward, seeking high returns while mitigating potential downsides. The portfolio will prioritize this strategy due to its adaptability and responsiveness to market conditions. Based on the historical data and forecast, Solana name service exhibits a downtrend. The price has been consistently declining from March 19, 2025, to April 8, 2025, with a forecast indicating further price drops. The RSI consistently remains below 50, with several days trading in oversold territory below 35, suggesting weak buying pressure. The Bollinger Bands are contracting, which often indicates a period of consolidation before a potential breakout. Considering these factors, a short position is recommended. My strategy involves a short entry at $0.0979. Given the consistent downtrend and oversold RSI, I will place a stop loss at $0.105, just above the upper Bollinger Band, to protect against a potential short-term reversal. The target price will be $0.0883, aligning with the forecast price for April 8, 2025. This strategy combines trend analysis, RSI confirmation, and Bollinger Band support for a high-probability trade. The support price of $0.0949 will also serve as a secondary target if the initial target is reached early. Based on the historical data and forecast, Doge-Coin shows a downtrend with decreasing forecast prices. The RSI consistently hovers around the 40 range, indicating a slightly oversold condition but not strongly so. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given these factors, I recommend a cautious long-term strategy focusing on potential rebounds near the support level. I propose entering a long position at $0.163, placing a stop loss at $0.160 just below the support price of $0.167 to mitigate potential losses if the downtrend continues. The target price for this trade will be $0.174, aligning with the recent close price and the forecast price on April 2, 2025. This strategy combines the RSI's oversold signal with the support level and forecast data. This approach aims to capitalize on potential short-term bounces while minimizing risk through a tight stop-loss. This is a moderately conservative strategy suitable for investors seeking to balance potential gains with risk management, given the current market conditions. Based on the historical data and forecast, PEPE demonstrates sideways movement within a defined range of $0.0000760 to $0.0000850. The RSI fluctuates around the 50 level, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price is occasionally touching the upper and lower bands, suggesting periods of volatility. Considering this information, I propose a range-bound trading strategy focusing on short-term opportunities. The strategy involves entering long positions when the RSI dips below 40, indicating an oversold condition, and exiting when the RSI reaches 65, suggesting an overbought state. Specifically, enter a long position at $0.0000730, with a stop loss at $0.0000760 and a target price of $0.0000830. This strategy aims to capitalize on short-term price fluctuations within the $0.0000760 to $0.0000850 range. The forecast data suggests a slight downward trend, so the stop loss is set slightly above the recent low to protect against minor losses. Based on the historical data and forecast, SHIB shows a slight upward trend with price fluctuations. The RSI values generally fluctuate between 41 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast prices for the next week are slightly decreasing, ranging from $0.0000130 to $0.0000126. Considering these factors, a moderately bullish strategy is recommended. Therefore, I propose a combined strategy focusing on the RSI and Bollinger Bands. We will enter a long position when the price touches the support level of $0.0000124, coinciding with a potential RSI oversold signal below 20. The stop loss will be set slightly below the bottom Bollinger Band at $0.0000118 to manage risk. The initial target price will be the resistance level of $0.0000152, but we will adjust it based on the price action. If the price reaches $0.0000140, we will move the stop loss to the middle Bollinger Band of $0.0000129 to secure profits. This combined strategy balances risk and potential reward, capitalizing on the slight upward trend while protecting against significant downside moves. Based on the historical data and forecast, DOG-COIN exhibits a downtrend. The price has been consistently approaching the support level of $0.421. The forecast for the next week suggests continued decline, with prices dropping to $0.396. The RSI values have been fluctuating between 35.9 and 50.6, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been trading within a narrowing range, suggesting increasing volatility. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.422. The stop loss will be set at $0.437, just above the recent high and the upper Bollinger Band. The target price will be $0.408, aligning with the forecast. To refine this strategy, we will incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, we will consider entering a short position. Conversely, when the price touches the lower Bollinger Band, it also signals a potential short entry point. Combining these indicators, we will enter a short position at $0.422. The stop loss will be placed at $0.433, above the recent resistance and the upper Bollinger Band. The target price will be $0.408, based on the forecast and the lower Bollinger Band. This combined strategy leverages both momentum and volatility indicators for enhanced risk management and potential profit maximization. Based on the historical data and forecast, Doge-Coin has shown a slight downward trend recently, with the forecast prices consistently below the recent close prices. The RSI consistently stayed between 40 and 54, indicating a neutral to slightly bullish momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation. Considering these factors, I propose a cautious long strategy. The entry price will be $0.00225, coinciding with the support level and a potential oversold condition based on the RSI. The stop loss will be set at $0.0022, just below the support level, to limit potential losses. The target price will be $0.0026, aligning with the previous resistance level and a reasonable profit target given the current trend. To refine this strategy, I will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, it suggests a strong bullish momentum, and the target price should be adjusted to $0.0027. Conversely, if the price breaks below the lower Bollinger Band, it signals a bearish reversal, and the position should be closed immediately. The RSI will serve as a secondary confirmation. If the RSI falls below 20, it reinforces the oversold condition, and the position can be held with a tighter stop loss. If the RSI rises above 80, it suggests an overbought condition, and the position should be closed to avoid potential corrections. This blended strategy, combining support/resistance, RSI, and Bollinger Bands, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, NEAR protocol shows a downtrend, particularly evident in the recent forecast prices. The price has been fluctuating between a support of $2.51 and a resistance of $3.01. The RSI has been mostly below 50, indicating a bearish momentum, and the Bollinger Bands are narrowing, suggesting increasing volatility. Given this, I recommend a short selling strategy. We will enter a short position at $2.65, placing a stop-loss order at $2.75 to limit potential losses if the price unexpectedly rises. The initial target price is $2.45, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, we'll hold the short position, anticipating a bounce. Conversely, if the price touches the lower Bollinger Band, which is currently around $2.47, we will take profit. If the price reaches the $2.45 target, we will close the position. This combined approach allows us to manage risk and maximize potential returns by leveraging both trend analysis and technical indicators. Based on the historical data and forecast, Internet Computer has shown a fluctuating trend with support at $5.28 and resistance at $5.66. The RSI indicator has generally remained within the range of 37.3 to 52.5, suggesting neither strong overbought nor oversold conditions recently. However, the forecast predicts a downward trend with prices ranging from $5.49 to $5.25, indicating a potential opportunity for a short position. Considering the Bollinger Bands, the price has been fluctuating within the bands, suggesting moderate volatility. Therefore, I propose a short-term short position strategy with an entry price of $5.49, a stop-loss price of $5.55, and a target price of $5.25. This strategy aims to capitalize on the predicted downward trend while limiting potential losses. To refine the strategy, I will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will consider a long position with an entry price of $5.25, a stop-loss price of $5.2, and a target price of $5.4. Conversely, if the RSI reaches 70 or above, indicating an overbought condition, we will maintain a short position. Combining these signals with the Bollinger Bands, which suggest potential price reversals at the band edges, will create a robust portfolio. The final portfolio will prioritize the short position based on the forecast, with RSI and Bollinger Bands acting as supplementary indicators for fine-tuning entry and exit points. Based on the historical data and forecast, Injective has shown a downtrend recently, with the forecast prices consistently below the recent close prices. The RSI consistently remains below 50, indicating a weakening momentum. Furthermore, the Bollinger Bands have been contracting, suggesting decreasing volatility. Considering these factors, I propose a short selling strategy with a conservative approach. We will initiate a short position at $8.77, placing a stop-loss order at $9.02 to limit potential losses if the price unexpectedly reverses. The initial target price will be $8.37, aiming for a modest profit while acknowledging the inherent risks of short selling. To refine this strategy, we will incorporate RSI signals. If the RSI rises above 80, indicating overbought conditions, we will immediately cover the short position at the prevailing price. Conversely, if the RSI falls below 20, signaling oversold conditions, we will reassess the position and potentially adjust the stop-loss order downwards. The Bollinger Bands will act as a secondary confirmation tool. A breach of the upper band suggests a potential upward correction, prompting us to tighten the stop-loss or consider covering the position. A sustained movement below the lower band reinforces the downtrend and justifies maintaining the short position with a revised target price of $8.24. This layered approach aims to maximize potential returns while mitigating risks through dynamic adjustments based on technical indicators. Based on the historical data and forecast, BTC demonstrates a downtrend, particularly evident in the recent forecast prices consistently decreasing from $226 to $203. The RSI consistently hovers around the oversold territory, fluctuating between 36.3 and 47.0, indicating potential buying pressure but also suggesting a sustained weakness. Considering the Bollinger Bands, the price is currently near the lower band, reinforcing the downtrend. Therefore, I propose a contrarian strategy focusing on short-term gains. I would initiate a short position at $220, anticipating a bounce from the support level of $224. A stop-loss should be placed slightly above the recent high at $231 to protect against a potential reversal. The initial target price is set at $215, aiming to capitalize on the short-term downward momentum. To refine the strategy, I will incorporate a dynamic approach based on RSI and Bollinger Bands. If the RSI rises above 50, indicating a shift in momentum, I will close the short position and consider a long position at $211, with a stop-loss at $206 and a target price of $215. Conversely, if the price breaks below the support level of $224, I will adjust the stop-loss to $227 and reevaluate the position based on the revised trend. This adaptive strategy aims to maximize returns while minimizing risk, leveraging both technical indicators and price action to navigate the volatile market conditions of BTC. Based on the historical data and forecast, THETA network has shown significant volatility, with support around $0.804 and resistance near $0.981. The RSI has fluctuated between 33.3 and 48.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have also widened, suggesting increased price swings. Considering the recent downward trend in the forecast, I recommend a short position strategy. We will enter a short position at $0.843. The stop loss will be set at $0.863, just above the upper Bollinger Band to account for potential short-term price spikes. The initial target price will be $0.743, aligning with the forecast price and a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we'll tighten the stop loss to $0.833. Conversely, if the RSI rises above 70, suggesting overbought conditions, we'll consider covering the short position and taking profits at $0.816. The combination of technical indicators and forecast data should provide a robust risk management framework, maximizing potential returns while minimizing downside exposure. This dynamic approach allows us to adapt to changing market conditions and optimize our investment outcomes. Based on the historical data and forecast, WorldCoin shows a downtrend with a recent price consolidation near the support level of $0.767. The RSI consistently hovers below 50, indicating a bearish momentum. The forecast for the next week predicts further decline, with prices potentially reaching $0.745. Considering the Bollinger Bands, the price is currently near the lower band, suggesting a potential rebound in the short term, but the overall trend remains bearish. Therefore, I recommend a contrarian strategy that aims to capitalize on short-term bounces while mitigating downside risk. My proposed strategy is to initiate a long position when the price touches the support level of $0.767, anticipating a short-term bounce. The entry price will be $0.767. To protect against a potential breakdown, place a stop-loss order at $0.747, just below the lower Bollinger Band. The target price will be $0.801, aligning with the recent resistance level and a reasonable profit target for a short-term bounce. This strategy combines RSI oversold signals, Bollinger Band analysis, and support level confirmation to maximize potential returns while managing risk. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Hooked Protocol shows a downtrend. The price has been decreasing from 0.154 to 0.114 over the past 2 weeks. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are widening, suggesting increasing volatility and confirming the downtrend. The forecast for the next week predicts further decline. Therefore, a short selling strategy is recommended. We will initiate a short position at $0.130. The stop loss will be set at $0.135 to protect against unexpected price spikes. The initial target price is $0.120, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 30, indicating an oversold condition, we will hold the short position, anticipating a potential bounce. If the price touches the lower Bollinger Band, we will also hold the position, expecting a rebound. If the price reaches $0.120, we will take profit. If the price fails to reach $0.120 and the RSI rises above 50 or the price touches the upper Bollinger Band, we will close the position at $0.125 to minimize losses. This combined approach, blending trend analysis with RSI and Bollinger Band signals, should maximize returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a downtrend, with the forecast indicating a continued decline. The support price is consistently at $0.454, while the resistance has fluctuated but has been breached. The RSI consistently stays below 50, often dipping into oversold territory below 30, suggesting the asset is undervalued. Combining this with the forecast, I propose a contrarian strategy focusing on short-term bounces within the downtrend. We will enter a long position when the RSI reaches an oversold level of 34.3 on March 26, 2025, at a price of $0.454. The stop loss will be set just below the support level at $0.443, and the target price will be the resistance level of $0.505. To further refine the strategy, we'll incorporate the Bollinger Bands. The price frequently touches the lower band, confirming the oversold conditions. When the price rebounds from the lower band, it presents a good entry point. The portfolio will prioritize the RSI strategy, but with stop-loss adjustments based on the Bollinger Bands. If the price breaks below the lower Bollinger Band, the stop-loss will be lowered to $0.443, protecting against further downside. If the price reaches the upper Bollinger Band, we will take partial profits at $0.485. This hybrid approach balances the contrarian RSI signal with the volatility indicated by the Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Polkadot shows a downward trend with decreasing prices in the forecast period. The RSI consistently stays below 80, indicating no overbought conditions, but it dipped below 40, suggesting potential oversold opportunities. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price has been trading near the lower band, reinforcing the downward pressure. Considering these factors, I recommend a short-selling strategy targeting the support level of $4.02. The entry price should be $4.16, with a stop-loss placed slightly above the upper Bollinger Band at $4.81 to limit potential losses if the price unexpectedly reverses. The target price should be the support level of $4.02, aiming for a profit of $14 per Polkadot. To enhance the strategy, I suggest incorporating RSI confirmation. If the RSI falls below 30, indicating an oversold condition, it would strengthen the short-selling signal. However, given the forecast's continued downward trajectory, a conservative approach is warranted. Therefore, the final portfolio will be a short position with an entry price of $4.16, a stop-loss at $4.81, and a target price of $4.02. This strategy balances potential gains with risk management, aligning with a high-returns investment expert's approach. Based on the historical data and forecast, Filecoin shows a slightly downward trend with price fluctuations. The RSI consistently remains below 50, indicating a generally oversold condition, with a low of 39.2 on March 31st. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering this, I recommend a long position strategy. The entry price should be $2.8 on April 8, 2025, coinciding with the forecast price and the lower Bollinger Band touching. The stop-loss should be set at $2.75, aligning with the established support level, to limit potential losses. A target price of $3.19 is set, based on the historical high of the Bollinger Bands, aiming for a moderate profit. To refine this strategy, we'll incorporate an RSI-based exit. If the RSI rises above 80 while in the position, it signals an overbought condition, and we should exit the trade. Therefore, a secondary target price of $3.19 is established. This combined strategy leverages the oversold condition, support and resistance levels, and Bollinger Bands to maximize potential returns while minimizing risk. The portfolio allocation should be 60% for this strategy, and the remaining 40% should be allocated to other assets to diversify risk. Based on the historical data and forecast, Conflux shows a downtrend. The RSI consistently fluctuates below 50, indicating a weakening momentum. The forecast for the next week predicts a continued decline, with prices dropping to $0.0757. The support price is consistently at $0.0784, and the Bollinger Bands are narrowing, suggesting increased volatility. Considering these factors, a short position strategy is recommended. We will initiate a short position at $0.0813, placing a stop-loss order at $0.0863 to limit potential losses if the price unexpectedly rises. The target price for this trade is $0.0757, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. When the RSI dips below 30, it signals an oversold condition, potentially indicating a short-term bounce. Conversely, when the RSI exceeds 70, it suggests an overbought condition, which could lead to a price correction. The Bollinger Bands can help identify potential breakout levels. A close below the lower band suggests further downside potential, while a close above the upper band may signal a temporary reversal. Therefore, we will adjust our initial short position at $0.0813, and if the RSI falls below 30, we will reduce our position to manage risk. If the price approaches the support level of $0.0784, we will reevaluate our strategy and potentially exit the trade or adjust our stop loss accordingly. Based on the historical data and forecast, Ethereum name service exhibits a downtrend. The RSI consistently fluctuates below 80, indicating it's not an overbought territory, but it has frequently dipped below 35, suggesting oversold conditions. The Bollinger Bands have been contracting, signaling a period of consolidation followed by a potential breakout. Considering the forecast, the price is expected to continue declining, with a target of $14.9. I propose a short selling strategy. Entry price should be $15.8, with a stop loss set at $16.3 to limit potential losses if the price rebounds. The initial target price is $15.2, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, we'll initiate a short position at $15.7. The stop loss will be placed just above the upper Bollinger Band, around $16.8, to account for potential volatility. The first target price will be $15.4, coinciding with the lower Bollinger Band. If the price reaches this target and the RSI indicates an oversold condition again, we'll re-enter short at $15.3, with a stop loss at $15.7 and a target of $14.9. This layered approach maximizes potential returns while managing risk effectively. Based on the historical data and forecast, Avalanche shows a volatile trend with periods of consolidation and upward movement. The RSI values fluctuate between 42.4 and 58.9, indicating neither consistent overbought nor oversold conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Given the current forecast, which predicts a range between $19.1 and $20.1, and the support price holding steady at $19.8, I recommend a cautious, short-term strategy focused on capitalizing on potential upward bounces. My proposed strategy involves a long position with an entry price of $19.5. The stop loss should be placed just below the support level at $18.5 to limit potential losses. The initial target price is set at $20.5, aiming to capture a quick profit from a potential bounce. If the price reaches the target, we can consider moving the stop loss to break even and potentially extending the target to $21.5, depending on the market's momentum. This strategy combines RSI signals, Bollinger Bands volatility, and support/resistance levels for a balanced approach, prioritizing risk management while seeking high return opportunities. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend with periods of consolidation. The price has consistently tested the support level of $0.0225, and the forecast suggests continued downward pressure, potentially reaching $0.0218. The RSI consistently hovers below 50, indicating a bearish sentiment. I propose a short selling strategy with an entry price of $0.0236. A stop loss should be set slightly above the upper Bollinger Band at $0.0277 to mitigate potential upward spikes. The initial target price is set at $0.0225, coinciding with the established support level. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower Bollinger Band of $0.0222, it signals increased selling pressure, prompting a move to lower the target price to $0.0218. Conversely, if the price approaches the middle Bollinger Band of $0.0249, we will consider partially closing the position to secure profits and re-evaluate the trend. This combined RSI and Bollinger Bands approach allows for dynamic adjustments based on market volatility, optimizing risk-reward ratio and maximizing potential returns. Based on the historical data and forecast, PENDLE shows an upward trend with increasing momentum. The RSI consistently above 50 indicates bullish sentiment, with peaks nearing 60. The Bollinger Bands have been widening, suggesting increased volatility and potentially larger price swings. The forecast predicts continued upward movement, reaching $3.08. Therefore, I recommend a long position strategy. Entry price should be $2.83. The stop loss should be set slightly below the support level at $2.75 to mitigate potential losses. The initial target price should be $3.08, aligning with the forecast. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 40, consider a partial profit taking at $2.9 and adjust the stop loss to $2.7. If the price touches the upper Bollinger Band, consider taking another partial profit at $2.97 and moving the stop loss to the middle band around $2.45. This adaptive strategy aims to maximize returns while managing risk, capitalizing on both trend following and momentum-based opportunities. Based on the historical data and forecast, the sandbox exhibits a downtrend, with the forecast prices consistently below the recent closing prices. The RSI values fluctuate between 38.6 and 52.6, indicating periods of both oversold and overbought conditions, but generally not extreme enough to trigger immediate action. The Bollinger Bands show a contraction, suggesting decreasing volatility. Given this scenario, I propose a short strategy with an entry price of $0.278. A stop loss should be set at $0.286, just above the center of the Bollinger Bands, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.265, aligning with the forecast price and providing a reasonable profit margin. To enhance the strategy, I recommend incorporating an RSI-based adjustment. If the RSI falls below 30, indicating an oversold condition, consider covering the short position and potentially initiating a long position with an entry price of $0.269, a stop loss at $0.271, and a target price of $0.281. Conversely, if the RSI reaches 80, suggesting an overbought condition, maintain the short position but adjust the target price to $0.265. This dynamic approach, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Decentraland exhibits a downtrend, as evidenced by the decreasing forecast prices from $0.256 to $0.242 over the next week. The RSI consistently fluctuates below 50, with recent readings around 37, indicating an oversold condition. The price is currently near the support level of $0.244, and the Bollinger Bands are narrowing, suggesting a potential consolidation period before a further downward movement. Therefore, I recommend a short selling strategy. Entry price should be $0.247. Place a stop-loss order at $0.257, just above the recent resistance and the support level. The initial target price is $0.242, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, we can implement a tiered target approach. After reaching the initial target of $0.242, we can move the stop loss to the break-even point of $0.247. Subsequently, a second target can be set at $0.24, capitalizing on the anticipated downtrend. This phased approach allows us to secure profits while minimizing risk and potentially maximizing returns if the price continues to decline. This portfolio combines the RSI, Bollinger Bands, and forecast data to create a high-probability short-selling opportunity with clearly defined risk management parameters. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend, particularly evident in the recent forecast prices. The price has consistently approached the support level of $0.0806 and is predicted to continue declining. Considering the RSI values, which have mostly remained below 50 and recently dipped below 40, indicating a weak upward momentum, I recommend a short position. We will enter a short position at $0.0832, placing a stop-loss order at $0.0844, just above the upper Bollinger Band to avoid false signals. The initial target price will be $0.0785, aligning with the forecast for April 3, 2025. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $0.0795, we will adjust the target price to $0.0742, capitalizing on the predicted downward movement. If the price reaches $0.0741, we will set a final target price of $0.0741. This multi-tiered target approach allows for maximizing potential profits while mitigating risk. This combined strategy, leveraging RSI, Bollinger Bands, and forecast data, presents a high-probability opportunity for substantial returns. Based on the historical data and forecast, Uniswap shows a downtrend with significant volatility. The price has been fluctuating between a support level of $5.87 and a resistance level of $6.73. The RSI consistently dips below 50, indicating a weakening upward momentum. The forecast for the next week projects a continued downward trajectory, with prices ranging from $5.86 to $6.18. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the downward trend. The entry price for this short position will be $6.18. We will set a stop-loss at $6.43, just above the upper Bollinger Band to mitigate potential upward spikes. The initial target price is $5.87, aligning with the established support level. If the price breaks through the support level, we will adjust the target price to $5.86. The RSI readings consistently below 50 suggest that the asset is oversold, which supports the short selling strategy. This portfolio combines technical indicators and price action to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a downtrend. The price has been fluctuating within the support price of $13.4 and a resistance price of $15.5. The RSI indicates that the asset is currently not oversold or overbought, hovering around the mid-range. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential for a downward movement. Considering these factors, I recommend a short position strategy. We will enter a short position at $14. The stop loss will be set at $15 to limit potential losses if the price unexpectedly reverses. The initial target price will be $13.5, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will adjust the target price to $13.4, the support level. If the price touches the lower Bollinger Band, we will maintain the short position and reevaluate the trend. The portfolio will prioritize the short position strategy with a focus on the downtrend and support levels. This approach aims for high returns by capitalizing on the predicted price decline while managing risk through strategic stop-loss and target price adjustments. Based on the historical data and forecast, Aave exhibits a downtrend. The price has consistently tested the support level of $159 and faced resistance around $190. The forecast for the next week indicates a continued decline, with prices expected to reach $160. The RSI consistently remains below 50, fluctuating between 36.9 and 48.7, suggesting a generally bearish sentiment. The Bollinger Bands are widening, indicating increased volatility and confirming the downtrend. Considering these factors, I recommend a short position strategy. The entry price for the short position should be $165, capitalizing on the initial forecast decline. A stop loss should be set at $166 to limit potential losses if the price unexpectedly reverses. The target price is $160, aligning with the forecast for the week. This strategy combines the trend analysis, RSI indicator, and Bollinger Bands to maximize potential returns while minimizing risk. The portfolio should be 60% short position, 20% cash, and 20% allocated to a hedging strategy to mitigate potential losses. Based on the historical data and forecast, EOS exhibits a bullish trend with increasing momentum. The RSI consistently rises, reaching 69.8 on April 1, 2025, indicating strong buying pressure. The forecast prices predict further upward movement, with a potential to reach 0.725 by April 8, 2025. We will implement a combined strategy leveraging RSI and Bollinger Bands. Initially, we'll enter a long position at $0.639, coinciding with the first forecast price. A stop loss will be placed just below the support level at $0.600 to mitigate potential losses. The primary target price will be set at $0.725, aligning with the forecast peak. To refine the strategy, we'll incorporate Bollinger Bands for dynamic adjustments. If the price touches the upper band, we'll consider taking partial profits at $0.689. Conversely, if the price approaches the lower band, we'll tighten the stop loss to $0.650. This adaptive approach allows us to capitalize on upward momentum while minimizing downside risk. The portfolio will prioritize the forecast data and RSI signals, with Bollinger Bands providing supplementary risk management. The final target price will be $0.725, representing a significant potential return on the initial investment of $0.639. Based on the historical data and forecast, Tron demonstrates a sideways trend with fluctuations around the support price of $0.232. The RSI values have been oscillating between 46.5 and 56.2, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been fluctuating within a relatively tight range, suggesting low volatility. Considering the forecast prices, which remain close to the recent trading range, I propose a range-bound trading strategy. I will enter a long position when the price touches the support level of $0.232, with a stop loss set at $0.228 to protect against a potential breakdown. The target price for this long position will be $0.239, aligning with the recent resistance levels and the forecast. To enhance the strategy, I will incorporate RSI signals. I will initiate a long position when the RSI falls below 40, indicating an oversold condition. Conversely, I will consider a short position when the RSI exceeds 70, suggesting an overbought scenario. Combining this with Bollinger Bands, I will enter a long position when the price touches the lower Bollinger Band and the RSI is below 40, with an entry price of $0.232, a stop loss at $0.228, and a target price of $0.239. For short positions, I will enter when the price touches the upper Bollinger Band and the RSI is above 70. This combined strategy aims to capitalize on short-term price fluctuations while mitigating risks through strategic stop-loss placement and target price determination.